I'm with Frank Holmes, CEO of U.S. Global Investors at the Minds and Money Conference. Frank, you won an award last night. Congratulations.
Well, thank you.
Yes.
And it's my team also. Ralph Aldis was also recognized for, and we have a very sort of innovative, competitive investment team. And I think Morningstar is one that picked us as the top performing gold fund.
Oh, great. So tell us, at the Minds and Money Conference, what kind of sentiments you've been approached with?
Well, I think that we're trying to understand the changes taking place in capital markets. The regulations disrupt the formation, the creative process of capital. We've had so many new rules and regulations, from the fiduciary rule, its interpretation, from the cost of mutual funds versus ETFs. And the other part is this AML, anti-money laundering law. Well, that makes it difficult for Canadians to buy U.S. investments, and in particular mutual funds, and Americans to buy Canadians, but they can all buy ETFs. Right. So that changes the formation, the flow of capital. Now the big disruptive is technology of picking stocks, the use of technology and mechanical learning systems. So what is it today is to understand the signature. What is the pattern that makes an attractive company? What is the pattern that makes a consistent, attractive CEO? There are consistencies, but there's not that many of them. Like they say, it's a good stock promoter. Well, what's a great CEO? Because they're really nice? No, because they drive the highest cash flow returns on invested capital. And wherever they go, that's what they do. They fix up a balance sheet when they come in to repair a problem. They generate the income statement, they reposition it, all for one purpose: high cash flow returns on invested capital. So this past quarter, we wrote about this, and we noticed that the highest cash flow returns on invested capital are Australian gold stocks now. So they were up, like some of our stocks are up in 5 years, 800%, wow. And the GDX is down 50%.
So talk to us about the outlook for 2017 now, for gold.
Well, I think the big thing for investors to recognize is that gold has a DNA of volatility that's very unique. It's plus or minus 20%, 70% of the time. Right. That's what it is. But guess what? It's the same as the S&P 500. But most people think that gold is more volatile than the S&P 500, when in fact it's not. Its daily volatility is 1%. Same thing with the S&P. But gold stocks have a volatility like biotechnology. It's plus or minus 40%. So where are we now? We're basically flat. Gold could easily rise 20% over the next year and would only be up one standard deviation. It wouldn't be a big event for us. So I think that gold has greater legs on the upside than the downside.
And your advice is always valued for us on SmallCapPower. What's your advice for us at this time?
Well, investors should always consider 10% weighting in gold, but make sure they rebalance each year. Whenever you have these spectacular runs on some of these juniors, take some profits off the table and look for something else, because they just don't go up forever.
All right. Well, Frank, thank you so much for all of your insight today.
Thank you.
For more on Frank Holmes, make sure you check out his other interviews on SmallCapPower.